Welcome to Charts This Week. My name's David Linton, I run Updater, and well, what a week it's been. I mean, none of us can fly anywhere, and the markets have been quite benign in their reaction, really, in terms of that. I mean, the US stock market is perhaps more interesting. We saw the Goldman Sachs scandal breaking on Friday, and a lot of people are saying, is this a top? This is a weekly cloud chart, zoomed right in on the cloud, so we see here these weekly candles. Is this a doji at the top of a little run? It's hard to really say that that's the case, but we have had several weeks where we nearly went up about 20%. So we shouldn't be that surprised to see a little bit of a setback, having broken through the previous high. And this previous high level of about 1150 is pretty key. The cloud support level is right back at 900. So the market could fall a hell of a long way back, retracing this move since the low last year, and we'd still be in the bullish phase on the weekly, so long term. So quite interesting, but really too early to say that it's a top. And here we see the daily chart. So we see the candle for Friday is now quite marked. We did have quite a strong week leading up to Friday, and we didn't end up a lot different on the week, hence the candle looking a little bit like a doji. So really it's still too early to say that this run is over. And on this chart, because it's a shorter term chart, the daily chart we're thinking weeks ahead, the weekly chart we're thinking months ahead. On this daily chart we're seeing that we've got levels of about 1120, 1130 for the S&P. We did break through that 1200 level, but we're back at the 1190s. And of course this same support level, which was tested quite a bit in January, which was resistance, is now becoming a support level, and that's where cloud support is as well. So we wouldn't be that surprised to see the market come all the way back to that sort of level. But really the key thing here is it's still in a bullish trend on the daily cloud. And if we go to the 60-minute cloud, even this remains bullish. It's been bullish ever since we had the cross back in February. We've really going up and up and up. We've tested the cloud, really low points in the hours, have tested right on the cloud. And key thing is on Friday we fell right back to the cloud, so quite interesting that shock took us back to the cloud, and that's our test. And 1180, 1175 is probably around cloud support for the lagging line at the moment, so even this chart is still bullish despite those falls on Friday. And then if we look at the point and figure chart, this is the daily chart. Here we see we've still got the target of 1270. We haven't had a reversal. Remember, this is a 10 by 3, so we would need a reversal through a full 30 points. We'd have to close below 1170, which would take us through on that hourly lagging line before we'd even paint a new column of noughts. So what's quite key here is that the upside targets are still in train, and this chart, remember, is designed to remove the noise of the reversals until they're significant. And here we see the 1 minute chart, and quite interestingly we had upside targets to 1221 given back here when we were at 1190. We did have the downside target given on Friday and a lot of price action, and the downside target was to 1189. We have another one to 1185, not that spectacular, still in an uptrend, and if we manage to get back above the sort of 1200 mark, we're going back to about 1215. So not exciting targets, but this does suggest that the market did fall to the target level already on Friday, so we'd be surprised to see lots of heavy falls this week. But of course this 1 minute chart can change very, very quickly, and this is the chart to keep an eye on for new targets. If we look at the euro, look at currencies now, euro is still bearish. We crossed at the end of last year below the cloud. At the turning point in the year we were bearish. We'd made that cloud cross, been bearish on the euro all this year, and we see here that we did test the cloud on the price very recently. Will we make a new low below 132.50 on the euro dollar? And the signs are, because we couldn't make a higher high, we will come back and test these lows, so quite key that. And then if we look at the 60-minute chart, we see we're even bearish on this time frame. 60 minutes, hours, we're thinking days. So this week we would expect bearish action, although we can actually have upside, a counter trend rally all the way up to about 135.50, 136 even on the lagging line before we'd get across on this cloud. So there is room for recovery short term, but the very short term, but the short term picture is quite bearish. And then if we look at the 1 minute targets for the euro on the point and figure, we see we had a 136 target which was given and met. This is a 1 minute chart target, 1 minute target remember, so it was given last week and met, and then we've had these downside targets. 138.80, 134 is now getting 133.80, sorry, 134 close to being met, and this big downside target of 132.50 takes us all the way back to that low point. So there is downside pressure in the short term, in the very short term on the euro. And if we look at sterling, this is the daily chart, much the same picture, bearish on sterling. We have to get really above 157 for sterling to have turned against the dollar, so not a great picture there either. Then if we look at gold, we have the daily chart. This has made a cross recently into bullish territory, but the lagging lines come through. We're coming back into the cloud and testing, so we're congested on gold. Quite a hard call. And if we go to the 60-minute chart on gold, we do see that the cross that was given when we had the recovery on gold, we had another bearish cross just recently, and gold consequently is under short-term pressure. So in the coming days, gold may fall further, and we need to get really back above this sort of 1140 mark, probably 1150 mark on the price for gold to be bullish again. So bullish on the daily, but we've got a short-term bearishness on the 60-minute chart. And then if we look at oil, really quite an interesting picture. We've been falling quite heavily off the highs last week in oil, but what we are seeing here is that we've got to really close below 75 on the cloud for the lagging line and the price to be through there. So 75 is the level on oil, and we probably need to see a couple of days of it closing below there. There is cloud support at about $80, so at the moment we're still bullish on the daily trend on oil. And if we look at the 60-minute chart, this is bearish. Been very congested last week. We have now got a bit of a clearer pattern, and we need to really get back above 83, 84, even $85 on the lagging line for oil to be bullish again on this chart. So we suspect that this is going to be in the bearish territory for the next few days and testing the cloud. So oil's looking bearish in the short term, and in fact the point and figure 1 minute targets, remember this chart is changing very, very quickly, so you need to keep an eye on this in real time really. And the 1 minute chart is giving targets. We've just got an upside target of 82.70 that's just come in, but it hasn't been activated. We need to close, we need a minute where we do get above this sort of 81.50 mark for oil to actually give that target activation. It's not a very exciting target, and it is counter trend because we are on a downtrend. We've got downside targets of 80, 81.20, 78.70 is a bit worrying, but remember we've got to look to these other targets being met before we start hanging our hat on 78.70. This is a 10-cent chart, and the 5-cent chart also has a 78.70 target, so it's clustering it around those mark. If we look at German power, power has crossed in the price on the daily cloud, so this is quite significant that for the first time this year we are through the cloud on the price on power, but the lagging line hit the cloud bang on and it is pulling it back from the cloud, so we really do need power to close above 49.50 to be convinced that we're through into a new bull trend on power. That's burden is decreasing. It'll be about 48 in a week or two's time, but we do need to cross this cloud to be really convinced that we're bullish. But we have come back to test the cloud. And here we see the 60-minute chart. Once we crossed the cloud, having been below the cloud all this year, or even on the 60-minute chart, we crossed the cloud very dramatically the week before last, and now we do have very steep clouds, so we would expect the price to congest and touch and test this cloud. At the moment, the power needs to stay above about 47.50, 48 to stay above the cloud on this short-term time frame. So power is looking relatively bullish on that measure. Here we see the 1 minute chart, and again remember this chart is changing in real time, so just keep a very close eye on this because new targets will come in. But the story is if we break above 49.50 on power, 51's the next target. If we break below 48.50, then 46.40 is the target. You've got to watch this chart really carefully on your screens, but this is giving us the upside and downside. Power could go either way. Quite an interesting situation brewing this week. Looking at gas, this is NBP, UK Gas. We are just crossing the cloud, having had a nice little run on gas, starting to head back into that bearish zone. So gas has maybe not got such a good week ahead of it. Need to keep an eye on this. This is a 60-minute chart, remember. It is going to change as price changes, but at the moment gas is looking bearish in the short term. And then if we look at just running some scans, in the Cloud Charts book in the appendix at the end, I do discuss scanning, and running a scan on the UK FTSE, we see that there's one chart that's just given a cloud cross. You can scan on large universes, but there's only one at the moment that's just given a bullish cloud cross, and that's Home Retail Group, and it has just crossed on the cloud. So quite an interesting chart, that. But you need to keep running these scans to keep finding the opportunities. That's it for this week. I'm always happy to cover any charts you like. Just email me at david@updater.co and I'll do my best to cover them. Until next week, happy charting. See you then.